talking about optimism, I have some news that isn't really sounding all that good. 25% of all GST accounts are fake. Well, that's according to the latest findings of the government appointed committee, and this says that 25% of the 69,000 GST accounts in the country are fake, and they have led to losses worth of 15,000 crore rupees. You heard that right, 15,000 crore rupees. Amit, you've been tracking the story. Talk to us. GST, we've been talking about how fake PANs and fake Aadhars get used, but this number is huge. 1 in every 4 GST accounts is fake?
I would like to basically find out what constitutes that fake. I'll go back to what I was. I mean, I had a GST account before I joined here. I had my own little outfit. And when the pandemic came, I was filing 0, but I still had to file because the pandemic, basically, there was no business. So does that even constitute fake when you don't have any business, or it is basically they've just opened an account in GST for the sake of for getting some
okay, before we get to that, talk to us about CBIC and what exactly has been the findings of 15,000 crore rupees. Karthik, if you can help us understand what is exactly gone on over here, because the headline number is very clear. 1 in every 4 GST account is fake, and we've lost 15,000 crore rupees worth of tax revenue.
That's right, Krishna. But I think I would not take the liberty of extrapolating that finding of 25% of the 69,000 accounts scrutinized by the GST network, right? Okay. It's not the total number of GST accounts. That number would be much larger, and I don't think we can use natural probability. I know you're a student of statistics and that temptation to use the natural laws of normalization, that it's a large enough sample size, 69,000. You need only 35 for the normal bell curve to be normalized, right? We're talking about 69,000, but these 69,000 are not randomly picked. These 69,000 accounts showed some signs of misgiving and showed some signs of not being accurate, and hence they got scrutinized. And of these 69,000 that got scrutinized, 25%, you said the number right, 25% seem to be fake. It's still a huge number, but I would not extrapolate that 25,000 or 25% rather to the entire population.
What about the money lost?
Yeah, coming to that. Right. Now, incidentally, Delhi seems to be, unfortunately, the biggest fake GST market of this 25%, right?
Dilwalon ki Delhi.
Well, not really in this case. So what has really happened is there's something very critical in GST, and we've done long debates on that, called input credit. Right. Now, what is input credit? Let's say you're a supplier of X goods, and those goods require certain raw material which you process. The raw material that you procure, you and the supplier of that raw material have paid GST on that. Now, in your books, when you file your GST returns, you seek certain input credit so that the double taxation is avoided.
Correct.
That input credit, which reduces your overall liability, tax liability, is what input credit really is. Now, what has happened in these 25% of the cases of the 69,000 accounts that got scrutinized, the 25% which are fake, they've taken input credit from some entity, put that on their books, taken the rebate on their own tax filing, the GST filing, even if it's a zero return that Amit was talking about. They have filed 0 returns or higher than 0 returns on the back of the input credit that they have sought. Now, when the CBIC, Central Board for Indirect Taxes and Customs, went deeper into that value chain to discover these companies which were suppliers to the companies that have filed GST, they realized those were bogus companies. They never existed. If the companies never existed, the services or raw material provided to these 69,000 or 25% of these 69,000 is fictitious. So 15,000 crore rupees worth of input credit has been taken by companies in a market where those companies which have provided the input don't exist, and hence no input was provided in the first place. So that's the 15,000 crores you're talking about, and obviously big money in a country where the overall tax base is low. We saw e-invoicing as a concept being generated in 2020, and this input credit being critical to e-invoicing and matching of books, tallying of books between suppliers and eventual sellers. E-invoicing would have, to my mind, played a crucial role in this tally mismatch happening between availing of input credit with a GST number assigned to that input credit and that GST number or a company doing business with that GST number non-existential.
Right, Amit, fascinating to always watch Karthik, deconstruct something, peel the layers of an onion as he always talks about. But the fact of the matter is, I think Amit's question is fascinating. I have a similar problem myself. All these GST accounts, which are not used, they're used to file nil, the returns on a monthly basis because you have to file GST returns on a monthly basis. Would they, qualify as a fake account?
No, they would not qualify as a fake account till as long as you're filing that zero return.
All right.
If you stop filing that zero return, you're still not a fake account, you're a defaulter. You're a defaulter on your tax liability or the return of at least a statement, if not money, to the government.
That I exist.
Claiming that you exist and you continue to be on the GSTN books, but you don't have any income or you don't have any taxable income to file returns on.
Right.
Fake accounts would be accounts that have been created to do fraudulent activity, to provide input credit to other companies and eventually not really providing any goods or services to really claim any tax on.
Fair enough. The only thing is that this drive by the Central Board for Indirect Taxes Committee, which began, is going to continue till the 15th of July. So we're still looking at more findings coming out, isn't it?
That's good news, Krishna. If you ask me, we live in a country of tax evaders, direct as well as indirect. We live in a country where very few people file real tax returns, and I'm glad that the government is going after them. Of course, the government has gone a little overboard with, let's say, introduction of TCS of 20% on travel expenses above 7 lakhs, etc. Those have been issues where I think there has been a little bit of the government overplaying its hand.
Right.
Or even for that matter, the discussion we had yesterday on going after IVF clinics and medical colleges. Well, there would be data to support the government's overaction on that account. But overall, I think going after tax evaders is definitely the right thing to do in a country where we are still talking about a fiscal deficit, where we are still talking about government's revenue being lesser than the government's expenditure.
Right.
So I think going after tax evaders should be the #1 priority of the Finance Ministry, of the CBDT, of the CBIC, and whatever means, and to be fair to the government, they've also simplified it. So earlier there was harassment of individual taxpayers by the CBDT. When when tax evasion had to be justified by making multiple trips to the tax offices. Now the government has instituted a faceless tax evasion process. So if you have a notice from the tax authorities that you seem to be somebody who has concealed your income, not filed your taxes, it's faceless. You don't even need to walk up to the income tax office. All of that can be done over email. So while the government is trying to simplify this for individuals, but I think going after tax evaders, institutional, corporations or individuals in equal measure is a need of the hour.
Right, and another interesting thing I was noticing is that the CBIC used artificial intelligence and data analytics to track down these GST accounts. Fascinating, Amit, isn't it? Even for the taxman's weeding out process of the fake accounts, the artificial intelligence and data analytics are the go-to tools.
They are unbiased, they are not influenced by anybody, and they're going to take away quite a few jobs.